Gold is down below $5,000 on Fed pick and investor caution. For more on this, we're going to get some analysis on the latest moves in gold and silver from Kenneth Hoffman. He's head of commodity strategy at Red Cloud Securities and joins us live now. It's good to have you. Good morning.
Thanks for having me. It's been an interesting time, hasn't it?
It's been an interesting time. It's been an interesting couple of weeks also for the price of gold and silver. What do you make today? We're seeing these prices falling. Is there any one key reason why, or is there just a couple of factors here?
I think actually at the end of the day, we've had a thesis that gold would do very well over the long term, and we're in a long-term gold bull market because of what we call de-dollarization. And I think these past week has showed you exactly why you want to own gold and what is driving gold, which is the U.S. sort of leaving the world market and less dollars being needed, and therefore gold is where you want to be. Why? What we saw this week was, remember on Monday and Tuesday, Japan was trying to prop up its currency, so it was selling dollars and buying yen. That sent the dollar index down significantly. The dollar depreciated in value, and gold took off. What we've seen over the last 48 hours is really the reversal of that trade. Particularly last night with the president nominating of the four people for the Fed, this person seems to be the least likely to sort of lower rates quick. And the market saying, wait a minute, we thought Trump wanted far lower interest rates. Maybe they won't go down as fast, and therefore the dollar appreciated again, and gold and silver really took it on the chin. However, I think Trump's long-term goal has always been, and he stated this many, many times, to lower the value of the dollar. So that tells you as he goes ahead with his quest to lower the value of the dollar, gold is going to have probably a much better run than we thought because of the volatility we're seeing today.
Interesting. I guess all of that just goes to show we are in what we already knew was very unpredictable times, and that continues. So do you think that what we're seeing today in terms of the price lower, a bit lower, is just a minor blip for gold?
I think long term it will be, but again, it's instructing investors to watch the dollar, that gold is really replacing the dollar as one of the world monetary instruments, and that trend is specifically tied to what the dollar does over the long term. And we did see the dollar decline around 10% last year. It's slightly down this year, and I think what's really important about that is as it goes lower, and looking at the Bloomberg U.S. dollar index here, he wants to target something under 1,000, probably something in the 800 to 900 range. The reason he wants a cheap dollar is to pay off the massive U.S. deficit. But as those things come to fore, that's going to be a very powerful motivator to the price of gold going forward.
I want to talk about the price of silver and even copper if we can in a couple of minutes, but just still staying with the price of gold, right? Like we've seen where gold is sitting. Bitcoin still showing wide price swings. I know everyone talks about gold being that kind of safe haven. Are investors, do you think, maybe taking more of a risk than they realize with gold compared to Bitcoin, or what do you think?
Well, I think the volatility of gold has definitely picked up. It's nowhere near Bitcoin, and I've never been a big fan of Bitcoin, but I am a big fan of gold. And the reason being, that central banks can acquire gold right now. And it's a tier one asset, which it hadn't been in the past. And that is the trend that is your friend, which is central banks around the world, the biggest and most liquid players in the world, have been buying gold and will continue to buy gold. Now, around that is investors positioning, and that's what's giving us sort of the high volatility here. But the trend is your friend here. And silver is, less liquid than gold, and so you're starting to see it move around even more higher volatility than gold.
I was just about to ask about silver, right? Because we're seeing it dropping below $100. Is that? I take your point. It's more liquid than gold, but is that some of the same reasons we're seeing gold drop as to why we're seeing silver dropping?
I think they're completely in sympathy, particularly for remember the big retail has been a big buyer of silver. And I think when retail tends to, the reason is silver's a lot less expensive. It's a lot easier to buy an ounce of silver than an ounce of gold, and so it typically does have that higher volatility around gold. To me, it sort of has less of a central bank impact, which is why I prefer gold over silver. But the two are always tied at the hip. And in this case, it's, they're both showing that same volatility, with silver, which had much more volatility on the way up, showing that pullback, much more volatility on the way back down.
What about the price of copper as well? Like, we've seen copper hitting some record highs recently too. What do you expect to see in the, I guess, near future with copper?
I'm less bullish on the base metals than I am on gold. Again, sort of going to what the U.S. is doing in terms of trade. At Red Cloud, one of the things we talked about is chaos will be commonplace, and we don't think that Mr. Trump will change his ways. And so the tariff trade-off and impact on global economies, we believe will send the U.S. economy, into a bit of a 2026 issue. Once we get to 2027, love copper because of AI and infrastructure and electrical, but we think this year could be difficult. We're already starting to see pretty significant weakness out of China, which is the biggest trading partner with the U.S. And I think as other trading partners are less and less inclined to trade with the U.S., it could cause problems for the U.S. economy. And so I think at the end of the day, copper to me is something that has more downside than upside risk at this point in time, until we get into the huge part of the AI boom, which I think starts to occur after 2027.
Okay, unfortunately, that's all the time we have. We'll have to leave it there. But Kenneth Hoffman, appreciate you joining us today. Thanks so much.
Thanks for having me.
That's Kenneth Hoffman, head of commodity strategy at Red Cloud Securities.